Here is a question that might actually sound crazy. What if the secret to making profits in the crypto market is actually trading less? Most traders, when they start in the world of trading, they think that, oh, I should place more trades. I should go and make 10 trades a day, 20 trades a day. They wake up in the morning, open the chart, and they sit in front of it from 8 a.m. to 5 p.m. in the evening, if not to even 10 p.m. in the evening. And every single tick, every single green candle, they buy. Every single red candle, they sell. Every peak, they sell. Every dip, they buy it. What if I told you that actually most people don't lose money in trading because they miss good trades, but because they take so many bad trades? And when you learn this trick, my dear, when you learn this secret, you are going to find out why most profitable traders actually trade way less than you think. Welcome to our channel. My name is Moses. I am going to be your expert here at MoneyFest World School. And today I have a special topic, a topic that I want to share with you, a topic, my dear, that I know you've been asking yourself for quite a long time. Should I trade more to make more money? Or should I trade less to make more money? So if you're ready to listen, do one thing, like this video, subscribe to our channel, and let's get started. Let's begin with the biggest myth that many traders actually begin with out there. That myth is simple. People, when they start in trading, they think that many trades equals to more profits. Let me tell you, this is extremely wrong. It is very wrong. When most traders begin out there, you know what they think? Let me start placing 10 trades, okay? They wake up in the morning and they go and they start looking for every single trade they can. At the end of the day, they have placed 20 trades. But one thing they forget is simple, that when a market moves, it does not move in a single pattern. There are times of the day when the market is moving clearly. When you are seeing big candles, candles which are consistently going up, or candles which are consistently going down. There are times of the day which are like that. But when people see the market, they think that every single minute the market is going to be moving up or down. My dear, this is wrong. A market has what we call a consolidation. A market can move in a sideways trend. In fact, let me tell you this as an expert trader. A market may not make sense to you for quite a long time. The question is, are you going to force it to make sense? If you are, then you are not in the right place. So here is what to do. When the market is consolidating, the market is neither moving up or down, it is staying in one place for quite a long time, the best thing to do is to stay away from that. Here is what most newcomers are going to do. They think that since the market is moving in an upside trend, what can I do? I can buy and then I can sell up there. And up there I can sell and buy once again, and then they continue buying, selling, buying, selling, buying, selling. My dear, this way you are actually going to destroy your account. So, simple. When a market is choppy, my dear, it is a wrong place to trade. The market will not make sense every single time. Only a few days in the week does the market actually have big moves. There is a hidden cost to trading a lot. And that cost, my dear, I want you to fully understand it today so that you are never going to forget it. So that when you go to trade, you put it into mind and relax. Cost number one are the fees. Did you know that every trade you place, you are charged a small fee? And every fee you get charged, no matter how insignificant it may be, it's a fee that you're going to pay. If, let's say, you are charged $1 for every $100, that $1 can add up over and over and over again. And number two, there is what we call slippage. The more you trade, sometimes you trade in what we call highly volatile hours. An example, it can be market open, New York market open or London market open. During this time, there are so many orders which are being placed in the market that, ladies and gentlemen, your order is not going to get filled at the current price. Your order is going to be filled a little, maybe even a microsecond later. But that difference may mean a lot, because a microsecond later, the price may have gone from 1 to 5. Imagine you are buying something, and instead of buying it at $1, you buy it at $5. Think about that. Yeah? So, there is a fee you pay for every single trade you place. So, if you decide to place more trades, account for the fees. Remember, for every trade you place, you're going to pay, no matter how insignificant it may be, but it is a fee. And it is going to count, multiply, accumulate. Imagine at the end of the month you placed 100 trades. Don't you think those fees compile? And what if you entered those trades with slippage? What do I mean by slippage? You bought at 1, but your order was filled at 2. Meaning you bought more expensively. This accumulates and it adds up at the end of the month, and you ask, where is my profit? You are looking for the profit as if you are looking for a needle. If that happens to you, it means one thing: you are trading too much. Number 2, the emotional cost of trading a lot. My dear, trading can actually be an emotional thing if you trade every single hour, every single minute. Take an example. Most of you, when you enter a trade, you want to make a profit out of it, right? Let's say you've entered a trade, a 1 to 2. You are investing $1. Let's say you're investing $5. You want to make $10 out in profits. But you hit a stop loss. You lose that $5. How are you going to feel? Think about it. You have lost $5. You expected to make $10. I don't think you're going to be happy. I don't think you're going to be smiling, right? What are you going to do right after that? Here is where things start going south. Your first loss is going to determine how much more money you're going to lose. Because right after you lose that money, what you have in your head is simple. Let me place another trade to make back these losses. You go to place another trade. But to make back the previous loss, you're going to increase leverage. You're going to risk more. You're going to put in more money. What if that trade also goes to a negative? What if you hit a stop loss on that trade? How much money are you left on your account? Not much, I think. What are you going to be forced to do? You are getting more emotional. You are breathing very fast, as if you've seen a ghost. You now go into a third trade with 100x leverage. Meanwhile, you have $20 left on your account, and you want to make back all the other $80 you've lost. And eventually, you're going to lose it. That is a wrong strategy. That is a wrong way. It's called emotional trading. Stop revenge trading. Stop, ladies and gentlemen, placing trades to revenge with the market. You are literally going to the market to tell it, market, you've beat me, you've taken my money. Let me come back and make back all the money from you. My dear, the market is a very, very, very big educator. It is going to teach you a lesson you will never forget. I'm telling you these things because nobody's going to tell them to you, okay? So the emotional side of trading is one, it can be stressful for you to sit in front of the market from morning up to evening, because every time you see a potential trade and you don't take it, you're like, you see, you see. What didn't you see? Number 2, every single loss you take during one day, it increases your emotions higher and higher and higher, increasing the likelihood of making a loss, making a wrong decision. And every wrong decision in the financial markets can equal to a loss. So when you start trading, please trade as less as you can. I will tell you this. In my 8 years of trading, the more I got experience, the less I started trading. Today, I can tell you that I can place one trade a week and I'll make more money than you who trades 10 times a day. Not because I'm using big capital, but because I am catching the best trade. Because I know that every single trade I take, I have calculated the entry, the exit. I know how much money is to risk. I know how much money I'm going to make out of it. The other thing which you can count which is going to be a cost of trading, is going to be simple. And ladies and gentlemen, that is going to be the time you invest. Do you have the whole day? You don't have the whole day. Why should trading take 10 hours? It should take 30 minutes. You find a setup, you place it, walk away. Come back tomorrow, even next week. Find your profits. So now that we've seen all these reasons and these things which come with overtrading, the question should be, why do you feel like trading more every day? What is the psychology of placing so many trades? Why do people feel that urge? It's very simple. There are a few reasons, my dear. Number one is FOMO, fear of missing out. You've seen a coin which is pumping. The price starts climbing at a very fast pace. What do? You rush and buy that coin, thinking that the price is going to go to the moon. But my dear, you've forgotten that there is volatile times in the markets. Markets can make a spike and come back down. You buy, and as you are buying, the price drops back down, and it drops the hammer onto your account. By the time you open it, you don't even want to look there. You're like, what? Stop placing impulsive trades, okay? Because of that fear of missing out. Number two, boredom. Okay? Boredom. Whenever you sit in front of the graph and you cannot find a trade, you are going to force a trade. Trust me. Stop sitting in front of the graph hours and hours. Dedicate a certain period of time when you are going to trade. You can only say, I'm trading, let's say, every day at 5 p.m. You're going to find a trade. If you don't find a trade at 5 p.m., walk away. Close the laptop, close your phone, and walk away. Come back tomorrow. Because remember, one trade a week can actually give you more profits than 10 trades a day. Boredom is a very bad thing. In order to prevent that, stay away from the graph when you are not trading. Close the market. Go. Do something else. Have something else to do with your life. The graph shouldn't be all there is for you. Apart from that, the other reason why people trade a lot is one, because they don't have a plan. Every single setup they see is perfect for them. My dear, that is wrong. Okay? Only trade A-plus setups. What are A-plus setups? These are perfect setups. They don't come every day. They may come twice a week. They may come twice a week. And the other thing is impatience. Impatience. My dear, you see the market is reaching your support. And we said that at a support, that is where you should buy. But because you feel, it may not reach the support, you see, you buy. Okay? Before the market reaches the support. And guess what? The market may not actually reach the support. It may just go to the support and break through it to the bottom. But you've bought. Remember, you've bought anticipating the price to go up. But since you didn't wait for the market to touch the support, reject the support, give you a confirmation candle, which is a bullish engulfing candle, to show you that that support has been rejected, so the market is going to go up. You bought earlier. But the market, my dear, looked the other way and laughed at you, just broke through the support and continued falling. How are you going to feel when you're watching the market fall without any kind of stop? So, stop being impatient, wait for the confirmation. Okay? I hope you're going to use this advice. The last things I will tell you is simple. Please, one, dedicate a time when you're going to trade. Don't trade every single day. Number two, in crypto, there are days which are good for trading. Monday is not a good day. You can start looking for trades on Tuesday, Wednesday, Thursday. Friday may not also be a good day. But if you find a good trade on Friday, it's better than Monday. When you place a trade, please, the other thing I can tell you is don't hold trades throughout the weekend if you are a daily trader. If you're not a long-term trader, stop holding trades throughout the weekend. When Friday reaches, close every single thing, grab your profits and walk away. Number three, stop placing trades and thinking that the market is going to go forever. Have take profits, have stop losses, use them. And number 4, have a strategy. Have a qualification system that is going to tell you this is a good trade, this is a bad trade. And when every single thing works out, enter the market. If there is any one reason why your strategy is telling you that that is a bad trade, walk away. That is the advice I want you to take. With my 8 years of experience, my dear, I've learned it the hard way. I don't want you to learn it the hard way. Take my advice, use it, and start trading less. 2-3 trades a week are good. I hope you've liked this video. I hope you're going to take my advice. I hope you're going to start trading less and making profits. If you like it, you know what to do. Leave a like, subscribe to our channel, and always come back to MoneyFest World School for more information like this. By the way, if you're scared of trading, you don't know where to start from, you can join our team, MoneyFest World School, and you can also check in our description. There is going to be a link for you to join our free signal channel. Go and check it out. Maybe you can even start trading with us. I hope you're going to take this advantage and see you in the next video.